Hello everyone, it's Red with RedDragonLeo.com. Today is December 19th, 2010. This is the weekend update. And we're looking at the monthly chart right here. I don't really see a lot going on to the end of the year. I know that, some of you may think that, we might crash here real soon, but I don't see that happening. Even with the Hindenburg Omen now being confirmed with a second Hindenburg signal, keep in mind that when it is confirmed and stuff, that does not mean that it's going to crash the next day. It just means it's very, very near. And it does not mean that the high is in either. So it could actually go up a little higher from that Hindenburg Omen that is out there. So, looking at this chart, we can see that we are still rising up on the monthly chart, but I believe this will be the last month of an up month. I think that after this, we're going to see it roll back over and roll back down. And so we are putting in a negative divergence here. I think this will be the highest one we got from here on out. They're going to get lower till we finally dip down into negative territory later, mid 2011. So basically, where am I thinking that we're going to go up to? That fake print on the Diamond Spider Trust, which is 118.16 again, and that print is here for those. 118.16. So when that print is hit, I think that's it. I think that's a final high. I think that'll be in mid-January somewhere. So until now to then, I just don't see a lot happening. I really don't see a lot happening. Just some chop, little bit of a sell-off maybe. But other than that, I don't want to see a lot happening. So, and that also, if you notice, this area right here, that peak right there, and this peak right here, that's coming in pretty close to about where we expect that to happen, which is about 1280 to 1300 is about where it should correlate and match up on the SPX here, matching up with the Dow, the 118.16 print. So anyway. As for the weekly, see the same thing right here. Just a pause week here. Next week, maybe down a little. I doubt it. I think it's going to be a little bit of a chop action. Maybe put in a bull flag here. Maybe chop a few weeks sideways, and then make that final lunge up to this 1280 to 1300 range to hit our fake print. But we're not too far away, folks. We're really not. I would trade lightly because you still have POMO out there, and you have light volume. You've got the Christmas season. I just can't see any major sell-off happening. I just don't think that they're going to do that. So this here would obviously be a wave 1, a 2, a 3, a 4, and then a continuation up to about here, into the first or second week of January being the wave 5, completion of wave 5 on the upside. Okay, here it can be pretty much the same thing. Here's your wave 1, your 2, your wave 3, your wave 4, and your wave 5 again up here. But like I said, that doesn't mean we can't back down a little bit. One of the things I've noticed is when it comes to trend lines and supports, that the ones that are the most important and valuable are not the horizontal support lines like here. Yes, they are important, but the ones that are the most important are the ones that are drawing from a lower point to a higher point. Basically, you'd call that a rising or downward trend line. So either you could draw one here to be a downward sloping trend line. You draw one from here to here, if you draw a trend line there and extend it on up, that puts you at, looks like it puts you almost right here at this 50 moving average, which is around 1200 or so right now. This is a very, very important trend line. Of course, obviously, as time goes by, the trend line will be rising up to 1210, then 1220. So I don't see the market getting any lower than that trend line. So yes, this is a wave 5 up, but that does not mean that it won't dip back down here and maybe put in a B wave down, and then a final wave C back up inside of this wave 5. And that's kind of what I'm expecting to happen. Either way, it's if it's not a 3-wave pattern with an ABC inside of a 5, it could be a 5-wave pattern. We could simply fall back a little bit to make maybe some type of I don't know, maybe possibly this here sideways chopping is a wave 2, and or maybe it's this one right here. It's just guessing here at this point, but maybe this was the first wave up right here, and then maybe down here was a wave 2. Maybe we're getting ready to start the wave 3 right now. It's it's hard to say. We could just continue pushing on and then back down and then going up for the wave 5. So next week could end up going up if you consider this a very small wave 2 and this a wave 1. It doesn't look that way to me. It looks more like an ABC move up, but which would indicate to me that this will be again a wave 1, and we should back down no lower than breaking this trend line that's rising up right here, which by the time we hit there, it's right now at 1200, but it's going to rise up every day. So I don't think we're going to break that. So that'd be a B wave back down, and then one final C wave back up. And so it's either going to go in 5 waves or 3 waves continuing up. Now, yes, you can argue that we're getting ready to roll over, that's getting ready to start primary wave 3, and I just don't believe it. The gangsters have told us everything that they're going to do ahead of time. They have done it each and every time. When it comes to these fake prints, they put them out there, they are going to hit them. What are the odds of us going down and starting primary wave 3 when we're 400 points away from hitting that upside print, and going down first and then going back up later? We're not going up later. I mean, this is it. This is going to be the high in the market, pretty much, unless they throw another fake print out there, and I don't see. This is going to be the high in the market for a long time, at least until it crashes, bottoms out, and has hyperinflation. And then when it starts to have hyperinflation, then we'll have Dow 38,000, but it's equivalent to Dow 3,800 today. So it doesn't really correlate. But for now, I definitely think that we're going to possibly pull back a little here over the next week or two, and then have a final move up into early January. So looking at the 60-minute chart for Monday, it is looking bearish. You can draw this horizontal support or horizontal resistance line right here, and it looks to me like it could back down, maybe put in an inverse head and shoulders pattern if it's not already done so. But if this was the head or an inverse head and shoulders pattern, this could have been a left shoulder. This could have been another left shoulder. Here we've got our first right shoulder, and if we back down here on Monday to have another right shoulder, then we could turn around and go back up and then pierce it later in the week. So we could back down all of tomorrow. And that would kind of match up right here with the histogram towers being low, putting in a 1, 2, 3 lower towers, which would be your negative divergence. And also how it's went from 7.5 down to 5.0 down to about 1 right here. So it is losing strength. That would indicate we should be dipping down into the negative territory, Does not have to go to negative 7.5 though, but we should be dipping down and before we start to recycle back up. So this is indicating that we should pull back, and on the very bullish side, it would be an inverse head and shoulders, pulling back very lightly to 12. I don't know. Let's see, right there to about that point right there. If it's just what right here, 1237 or something like that. That is very bullish on the very bullish side. But again, we are at extremely light volume right now. So if we did pull back to only there, then we could continue right up without pulling back to 1220 area. But I'm not seeing much more than 1220 if this head and shoulders fails and we start to fall back down. I just don't see much more than 1220 before it turns and starts headed back up towards our final target, final destination. Same thing here. You can still see the inverse head and shoulders here that's kind of forming out, and it doesn't have to form. Like I said, this is only if it only backs off a little bit and turns and then runs back up. So that's a possibility. But again, this rising trend line here is very, very important as well too. As you can see, this one's in the 30-minute chart, and that would indicate a small pullback again without breaking it, and then doing the completion of that inverse head and shoulders and breaking out. On the daily chart, obviously it takes us down to about the 1220 area. But on the 30-minute chart that we're looking at here, if you drew a line from here up to here, it would have to break this line obviously to get down to 1220. But it could certainly do that. Going back to that daily, you could certainly break it, and then you would just basically be breaking this 10-day moving average right here for just coming in right at 1235. So if you break that, then I can see it move down to 1220 again right in here, and at the lowest 1200. That would be one big candle, but I just don't think that that's going to happen in one day. So by the time this thing chops its way down, this line that is not drawn in here, from here to here to here, is going to have moved its way up to getting closer to that 1220. So by the time that happens, so okay, so and here you can see obviously a rising wedge, which would indicate a breakdown again, right back down to about where we think we're going to go, 1235 range. So it's very likely. Everything is pointing to. I don't agree with this this move down here to 1195. I don't see that happening. I can see a back down to here and then again back up. So 5-minute chart, not really seeing much there. 5-minute chart's about the only one pointing up. So the rest of them seem to be pointing down. Looks like we should have a down Monday, at least in the beginning, and certainly break this wedge, pop back down to 1235, and then we're just going to have to see what happens. Remember, there's POMO out there Tuesday as well. As a matter of fact, it's a double POMO day, so they're just going to buy most likely. So again, folks, I don't see a lot happening between now and the end of the year. I think that the best thing that you can do is just be patient. Everything is already planned. It is they already planned on starting World War III sometime in 2011, and they already planned to raise the price of oil to $150 to $200 a barrel. And they already plan to devalue the dollar 30 to 50%. So, of course, a stock market crash is already planned as well too. We know that. So I'm just waiting patiently on the sidelines. It's very light volume. It's Christmas again and not a lot going on. I'm not expecting much. So so just everyone, just be careful, trade lightly. Don't expect a miracle here unless we have a false flag event to really shock the markets. I don't see anything happening. So, okay, that's it, guys. I guess I'll see you on the blog.